Hello and welcome to Simplicity in Stocks. Dividend stocks provide stability to an investor's portfolio during volatile periods in the stock market. The stability of these stocks has proven the importance of dividends to investors time and again. And when markets go up, dividends bring in some extra cash flow into your pocket. Dividends also provide an incentive for companies to increase their earnings so that they can pay an even higher dividend next year. This attracts even more investors, which in turn takes the share price higher. This is why, over long periods of time, dividend paying stocks have been shown to have higher returns than non dividend paying stocks. Even the father of value investing, Benjamin Graham, agreed when he said this. The true investor will do better if he forgets about the stock market and pays attention to his dividend returns and to the operation results of his companies. Before moving ahead, do keep in mind that this video is for information purposes only. It's not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. With that said, here are 10 stocks that you should have on your dividend watch list for 2025. Number 1. ITC. The company is India's leading FMCG firm and the market leader in India's paperboard and packaging industry as well. In the agri sector, ITC is acknowledged globally as a pioneer in farmer empowerment. In the hotel segment, it is a preeminent hotel chain in India. For years, ITC was planning to gradually shift towards an asset-light model in the hospitality sector for further expansion. Now these words have been put into action with the hotel business demerger. Over the last decade, ITC has successfully created an array of strong brands which are either number 1 or number 2. They are market leaders in their respective categories. ITC has always been considered as an attractive dividend stock. Since 1994, the company has rewarded investors every year with a higher dividend payout compared to its peers. Over the years, the company's management has laid out a flexible capital allocation policy. It has said that dividend payouts will be stepped up to about 80 to 85% of its post-tax profits. In FY24, ITC paid out 13.75 rupees per share as dividends. The dividend payout ratio was 82.7%. The company's 5-year average dividend payout is 90.4%. 2. HAL. Hindustan Aeronautics manufactures and maintains aircraft and helicopters for the Indian Air Force, Indian Army, ISRO, Indian Navy, Indian Coast Guard, among others. HAL plays a strategic role in India's defense program, being the only Indian company having specialization in aircraft manufacturing, maintenance, and related services. A few months ago, HAL signed a contract with Safal Helicopter Engines for joint design, development, and production of a new engine called Aravali. The company also has a massive procurement order of Rs 260 billion for 240 aero engines for the Sukhoi 30 MKI aircraft. This will increase HAL's already strong order backlog from Rs 940 billion to 1.2 trillion. Apart from this, the company has a deal on its cards with a US firm GE Aerospace for the joint production of F414 engines in India. It has also set up a 2.1 billion rupees integrated cryogenic engine manufacturing facility that would cater to the entire rocket engine production under one roof for ISRO. Since 2008, the company has declared regular dividends. In FY24, the company declared a dividend of 35 rupees per share with a dividend payout ratio of 30.7%. The 5-year average dividend payout ratio is 19.5%. 3. Dr. Reddy's Labs. Dr. Reddy's is an Indian multinational pharmaceutical company based in Hyderabad. It manufactures a wide range of pharmaceuticals in India and sells them overseas. The company's expertise spans several therapeutic areas, including oncology, gastroenterology, and cardiovascular treatments. Dr. Reddy's is actively expanding its capabilities with the recent establishment of a new oncology API facility in Vizag. This facility aims to support the company's growing presence in the sector. Additionally, the company is making significant progress in developing biosimilars and complex generics, particularly its biologics API division. With nearly no debt, Dr. Reddy's has shown impressive financial performance, delivering 24.4% compounded annual growth rate (CAGR) in profits over the past 5 years. Its consolidated revenue, operating profit, and net profit increased by 12%, 15%, and 24% respectively over FY23. Apart from growing its core business of generics, the company also invested in businesses of the future under three spaces of consumer health, digital therapeutics, and access to novel molecules. Dr. Reddy's diversified global presence, capability, and strong balance sheet make it a partner of choice for various businesses. The company's strong balance sheet also provides financial flexibility to implement all its ambitious growth plans. In FY24, the company declared a dividend of Rs 40 per share, with a dividend payout ratio of 12%. The 5-year average dividend payout ratio is 18.3%. BEL. Bharat Electronics manufactures and supplies electronic equipments and systems to the defense sector. The company also has a limited presence in the civilian market. The company was formed under the Ministry of Defense to handle India's defense electronics needs. During FY24, BEL achieved a turnover of 198.1 billion rupees against 173.3 billion rupees in FY23. This was a growth of 14.3%. The growth was driven by strong performances across all segments and regions. The order book position of the company, India's defense sector, is set to witness significant growth driven by the government's approvals of major military procurement projects. BEL stands to benefit from the procurement of defense electronic equipment like air defense fire control radars. The company's strong presence in the electronics and radar systems sector makes it a crucial player in India's defense ecosystem. BEL's solid order pipeline and strategic importance ensure its continued relevance and potential for growth. In FY24, the company declared a dividend of Rs 2.2 per share, with a dividend payout ratio of 40.8%. The 5-year average dividend payout ratio is 43.5%. RVNL. Rail Vikas Nigam Limited, incorporated by the Government of India, is engaged in the business of implementing various types of rail infrastructure projects assigned by the Ministry of Railways. It undertakes and executes the project development, financing, and implementation of projects related to rail infrastructure. It undertakes a wide variety of projects, including installation of railway tracks, electrification lines, building railway bridges, and establishing workshops or production units. The company is also looking for new projects in offshore markets, including Central Asia, UAE, and West Asia. The experience of around 2 decades in India of being one of the lead execution agencies for railway projects will help the company evaluate, bid, and execute orders in other countries. Beyond this geographical expansion, RVNL is also forging partnerships within the rolling stock manufacturing sector, solidifying its position in the railway ecosystem of India. The company's order book at the end of March 2024 was Rs 850 billion, a 51% growth. In FY24, the company declared a dividend of Rs 2.1 per share, with a dividend payout ratio of 27.9%. The 5-year average dividend payout ratio stands at 32%. NMDC. NMDC is engaged in the exploration and production of iron ore along with diamonds, production and sale of sponge iron, and the generation and sale of wind power. The company was established in the year 1958 as a fully owned government company under the administrative control of the Ministry of Steel and is one of the most profitable ones among the Navratna companies. It registered its best ever yearly performance by producing 45 million tons of iron ore and selling 44.4 million tons. The company recorded 10% growth in production and 16% growth in sales compared to FY23. This translated into a strong financial performance, earning a revenue of Rs 212.9 billion in FY24, which was a 21% increase from FY23. Strategic financial planning and pricing mechanisms has led to a net profit of 56.3 billion rupees. The company is gearing up to deliver 50 million tons of iron ore in FY25. It's also investing in capacity expansion and new infrastructure to augment its production capacity to 72 million tons from existing iron ore mines, while also developing the NCL, that is the NMDC CMDC joint venture mines, to contribute another 28 million tons. NMDC has a strong history of rewarding investors with dividends. In FY24, the company declared a dividend of 7.2 rupees per share with a dividend payout ratio of 38.1%. The 5-year average dividend payout ratio is 40%. Infosys Limited is India's second largest IT company. The company provides consulting, technology, outsourcing, and next generation digital services to enable clients to execute their strategies for digital transformation. The company's digital services are rated to be among the best in the industry. Infosys derives 57% of its revenues from digital services and the balance 43% from traditional services. The key business verticals for Infosys are the same as other large Indian IT companies like TCS, barring life sciences and healthcare. Infosys instead has energy and utilities and resources divisions. At present, the company caters to 185 of the Fortune 500 companies. Its clients include large companies like ICICI Bank, Mercedes-Benz, HSBC, Goldman Sachs, J&J, Accenture, Lockheed Martin, IBM, Deutsche Bank, and many more. In this fast-moving world of AI, the importance of traditional software services firms is very important. They will be the ones to integrate enterprise software with the new AI technology. Infosys will play an important role in this. Infosys has a strong history of rewarding investors with dividends. In FY24, the company declared a dividend of 46 rupees per share with a dividend payout ratio of 72.6%. The 5-year average dividend payout ratio stands at 58.6%. HDFC Bank. HDFC Bank is an Indian banking and financial services company headquartered in Mumbai. It's India's largest private sector bank by assets. The company announced a merger between its housing finance arm HDFC Limited and itself, which was completed on 1st July 2023, making HDFC the world's 7th most valuable bank. The combined entity has a customer base of 120 million, and the merger led to a substantial increase in headcount, with the workforce now totaling 177,000. HDFC Bank has been one of the most consistent performers on Dalal Street, growing at around 20% compounded annual growth rate for over 2 decades, and will continue growing fast due to India's strong GDP growth. The bank's network includes banking outlets comprising of branches and business correspondents, ATMs, cash deposit and withdrawal machines spread across India. The bank is a leading player in India's payments ecosystem too. Every third rupee spent on cards in India happens on an HDFC Bank issued instrument. The bank has foreign offices too, with branches in Bahrain, Hong Kong, UAE, and Kenya, where they offer NRI clients offshore deposits, bonds, equities, mutual funds, treasury, and structured products. HDFC Bank has a strong history of rewarding investors with dividends. In FY24, the company declared a dividend of 19.5 rupees per share, with a dividend payout ratio of 23%. The 5-year average dividend payout ratio stands at 17%. Power Grid Corporation. Established in 1992, Power Grid is among the biggest public sector undertakings in India. Despite its modest origins, the company has expanded rapidly to meet the country's insatiable demand for electricity. By carrying electricity throughout its nationwide grid network, the company acts as a connecting factor between power generating companies and trading companies. The company also ventured into EV charging infrastructure and is currently setting up charging stations across the country. Going forward, the company plans significant investments in expanding its transmission network with a focus on interstate and intrastate projects. This aims to connect renewable energy sources, improve grid stability, and also facilitate electricity trading. Largely due to its monopoly status, the company has rewarded shareholders with hefty dividends over the years. In FY24, the company declared dividend of 11.25 rupees per share with a dividend payout ratio of 67.2%. The company's 5-year average dividend payout ratio is 58.9%. HUL, Hindustan Unilever Limited, part of the Unilever Group, stands as India's leading fast-moving consumer goods FMCG company. It has a vast portfolio of over 44 brands in 14 categories, such as fabric solution, home and hygiene, skincare, and food. It enjoys widespread adoption of all its products. 9 out of 10 Indian households use its products. HUL holds either the top spot or a strong second position in most categories. Its portfolio targets various market segments including premium, mid-price, and economy. This sets it apart from its competitors focused solely on premium or on mass markets. Moreover, its revenue skew towards health and hygiene segments provides a relatively advantageous position compared to its peers. HUL also boasts of one of India's most extensive distribution networks. It comprises over 4,500 distributors and 8 million retail outlets. The company's strategic focus on premiumization and market development is leading positive results. By expanding its product portfolio, strengthening its distribution, and investing in brand building, HUL has been able to navigate the evolving consumer landscape successfully. While commodity prices have stabilized after a period of high inflation, the management continues to prioritize operational excellence to protect its margins. Between 2020 and 2024, sales and net profits of the company grew at a CAGR of 9.5% and 11.2% respectively. The company's return ratios have been robust, with ROCE and ROE averaging 42.9 and 31.5% respectively. The company has a long history of rewarding shareholders with hefty dividends. In FY24, the company declared a dividend of 42 rupees per share with a dividend payout ratio of 96%. The company's 5-year average dividend payout ratio is 95%. In conclusion, we can say that dividends are the lifeblood of many investors. They can help offset inflation and even provide an income during retirement. These stocks are often considered to be a good buffer for one's portfolio during times of market volatility. Dividend stocks also have the potential for value appreciation. They can thus bring the dual benefit in the long term. This provides an additional way to beat inflation. Not only does the stock provide an income, but the stock price appreciation also helps to offset inflation. If you want to dig deeper into dividend investing, use Equitymaster's powerful stock screener to check for high dividend yield stocks and dividend growth stocks in India. Happy investing!